Hello everyone, welcome back to my channel. Hope you are good. You're practicing social distancing. You're using your masks, you're washing your hands, and using alcohol-based sanitizers when you are not able to wash your hands. So today we will be talking about government-backed investments, which are treasury bills and bonds. So treasury bills or bonds are basically loans that citizens or residents of a country give to the government for the government to use for its infrastructural or businesses work in the country. So treasury bills or bonds are basically seen as a risk-free way of investing. Like you are guaranteed that at the end of a stipulated time, you will get the money that the government needs to pay you back for giving them the loan that you've given them. So it's almost like a foolproof way of making money on your money. Treasury bills and bonds are all time-based investments. Treasury bills start from 91 days, 182 days, and 365 days. Bonds are normally sometimes a year or two. Bonds may come up by some of the countries by somewhere from between 2 to 5 years. So some could be 2, some could be 3. It's normally 5. I haven't really seen a 4-year bond. So in Ghana, before you can get a treasury bill, you need to most often have a bank account or work with a fund manager. So any of the banks in Ghana, that's the banks with the proper banking, financial banking licenses, will be able to help you buy these or purchase these treasury bills. And in Ghana currently, if I remember properly, the 91-day bond is going for somewhere around 14 point, let's say 0.3 or 0.5% per annum. The 182 is I think 15 point something percent, and the 365 is currently around I think 16, close to 17%, all per annum. So what that means is that if you invest, let's say 100 cedis on in a treasury bill on a 91-day time frame, you would make at the end of the year, after 4 consecutive payments, 14% on the 100 cedis. So 14% on the 100 cedis is 14 cedis. Yeah, so 14 cedis divided by 4 is how much you would have made each time the 91 days due. So that's basically like 3 point something. So let's say you put in the 100, the first time it's due, you get 103 point something. The good thing about treasury bill is that you are able to roll over with your interest and your principal, and that becomes a new principal for you. So let's say you start with 100. At the end of the first 90 days you get 103 point something, let's say 103.5. When you are buying the treasury bill for the second time, your new principal is now 103 point something, so that the percentage that you get, like 3 point something percentage that you get at the end of the 91 days, is now on the new principal, which is 103 point something. I hope that makes sense. So that's for Ghana. In Nigeria, I think it starts from 3.5 for the 91 days. For 182 days, I think it's about 4.5 or 4.2, and the 365 is 5.5 or 5 point something, but it's all dependent mostly on the banks that you work with. So the banks will give you what rates they have each day from the Bank of Ghana to sell those treasury bills in or treasury bonds in. For bonds, however, you normally go in with a stipulated amount that you would get, just like the treasury bill, but then instead of it being like the 91 day or 182 or 365, it's for a longer period of time. And for bonds, I've seen bonds go from as low as 11% to as high as 18.9 something percent, depending on how much time it's going to take before it matures, and also the amount that you are given to the country or the government as a loan. But however, you should remember that if you are not quite sure how long you like your money to be invested for, you should try and stick with the 91 day, and do not cash in before the time agreed comes by. Because if you cash in early or expect to cash out early, you will be penalized and you lose a huge chunk of your money, if not or your investment on the principal that you put in. So you have to try and pace yourself. For me currently, I have a 91-day investment with Standard Chartered Bank now, and it's not doing too bad. I started it in, I want to say, early January, and it matured somewhere in March, and I got like 3.5% of what I invested in, basically, which wasn't too bad. It was money that if I had sitting in my bank account, it wouldn't have made me that percentage. And I used to have that money in data bank, EPAC, and then M Fund. I had to withdraw that, and I had to get penalized because the time wasn't due. But for me, it served nothing because I was losing on my principal, and it doesn't make sense for me as an investor to lose on my principal when I could have the money go and make me some money back when I put it in treasury bills, for example. So currently for me in treasury bill, that money, for example, I'm just trying to get it back to where I was with the data bank principal, basically. Then from then onwards, I'll see it as accruing money for me, basically. But for bonds, I don't yet have a bond, but my mom had a bond before, and I think it was for like 2 years. So you go into the agreement with the fund managers on how much you want to put out there and the percentage they are willing to give you. You negotiate with them, and then you give them the loan. But normally in Ghana, for treasury bills, you need a minimum of 100 cedis. For bonds, sometimes I think the recent euro bond that was publicized by the Bank of Ghana, which was a 2-year bond, the minimum was a 50,000 cedis, and anything above that was supposed to be in increments of 1,000 cedis. So if you don't have 50,000 cedis, you couldn't participate in that bond, and it was through Barclays, Stanbic, and I've forgotten what the other bank was. So that's how bonds are. Bonds are a bit more huge sums of money. And I think Stan Chart, when I was asking to do between the bond or the T-bill, the lowest for the T-bill was 100 cedis, like I said, and the lowest for a bond at that time was 10,000 cedis, basically. But I ended up doing the treasury bill because it was more short term for me, and I wanted to try out the various time frames of treasury bills to see which money gives me back the most bang for my buck, and eventually decide, okay, which is more feasible for me. Because I've had people that say the 182 is quite good. It has slightly higher payback, because let's say, for example, you have the 15%, that means 15 divided by 2 is 7.5. So you get every time is due, every 6 months when it's due, you get 7.5 of what you put in previously. But for me, with the 91-day, I feel like the 3.5 times 2 is still the 7, not 7.5. Well, it's 7, so it's almost close to it, but not much. But I plan to do the 182 and then the 365 to see how much returns I get based on the same amount of money over the period of time, and compare and see which one I'd rather stick with. But that's basically how T-bills and bonds work. So in Ghana, to have a treasury bill or a bond, you need, if you're working through a bank, you need to have a bank account, or you need to have an account with a fund manager, that is like Data Bank or Invest Capital or any of these other fund managers. You need to, if you don't have an account with them already, or even if you do, you need a bill. So your receipts for maybe electricity or water bill, directions to your house where you will write them or draw them out like you do creating a new bank account. And you also need, sometimes with most of the banks, you need a bank account where they will take the money from, where the profits or the invested capital and your principal we put back in, and then we invested at the end of the period in time. And you also need an identity card, so either a passport card or a Ghana card or a resident card or a voter's ID and a passport picture for the processes. And it will normally create for you, what do you call that thing, an investment number. If you have already bought treasury bills before, you'd use the same number that you got the first time or the previous times. But if you're new, a new investment number will be created for you that you use for subsequent investments, just so that the government is able to track I guess, your finances and everything in one place. And for the bonds, it's similar, the same way. It's the same thing, just that one is more short term, which is the treasury bill, and the bonds are more long term. So yeah, those are the differences between the treasury bills and the bonds. And before you go into the two, you need to know, for example, how much time are you willing to go before you get your returns. Are you comfortable with going with a 182 instead of a 91, or are you comfortable with doing a 365? You need to know all these things, and you also need to have the money. So at least with the treasury bill, you know, you can do with 100 cedis, you can do with 200 cedis, but the bonds is a bit more money. Like the lady the stancha told me is 10,000 cedis. And now with how much technology has affected our day-to-day life, for example, with StanChart app, you can buy the treasury bills and the bonds online. FYI, this is not sponsored, if you don't already know. And I think some of the banks also allow you to send a mail to your relationship manager and buy these bills or bonds online, and you just send them all the information that they need, and that would be it. So you're able to do that in a much more seamless way than it was previously done. I think before you start any of these bills, you need to have the funds in place. You need to know the time span. You need to be okay with that. You also need to remember to try and let the money live till its mature date. Don't try and take it out, because you really regret it. The good side about the treasury bills and the bonds is that it's basically risk-free. You know that the government is going to honor its duty to you and pay back your money, as compared to some of the others where you go in and you don't really know what to expect. But one of the cons is that it's really not that much percentage that you're getting. Like 3.5% every 91 days is not that competitive. When some people could promise you 5% each month, but then you have to be aware that those things come with other risks as well. And then the other side, and the other con of the treasury bill or the bond, is that you cannot say add up to it. So let's say you start with 100 cedis for a 91 day on January 1st. You cannot go back on January 5th and say, well, I want to add another 200 to it. No, you have to do a whole new treasury bill or bond application for that new money that you want to create. It becomes a bit cumbersome. You can't just go and add up to it. You have to do a whole new application for that new treasury bill that you want to buy. The other thing that you need to know is that you need to realize whether you want to roll over the point at the end of the mature date. Do you want to get the investment and just roll over the principal? You need to know all these things. I would advise that you just roll over the principal and the investment, so that your portfolio and your income keeps growing, and just forget about it and just let that money grow as much as you can. So but keep track of it. Don't forget to check your communication with your bank to see how much money you've accrued, how much money they took as service charge, because most of the banks will charge you a service charge. I think StanChart charges you about 3% or something to roll over automatically. You need to know what you want to do to be able to keep track of it and roll over at the point in time where you want to. And these charges are also how these banks pay their staff also, so you need to be aware of all that. So yeah, that's that for the government-backed treasury bills and bonds. In Ghana, you can do it if you're a resident, if you're a citizen. There's not really an age limit. I think if it's a minor, I think you have to be at least 18. But if you're doing it on behalf of somebody who is much younger, you can hold it into a trust for the person, so that when the person is of age, they can do it. You can also hold a trust on behalf of family members, on behalf of companies, on behalf of organizations, and with the treasury bills. So you can really do it for anybody or a new baby that you have. So yeah, I think treasury bills or bonds are definitely one of the best foolproof ways of investing if you're a new investor in Ghana, for example, or other parts of the African diaspora. Yeah, so thank you so much for joining me for this video and this topic. Let's talk below. Do you have any other questions about treasury bills or bonds? Is there anything I forgot that you think I should mention in? Please let me know. My next video would be about stocks, so how to invest in the Ghana stock market specific. Let's get chatting below. If you know anybody that's thinking about growing their financial world, their investment package, and or investment portfolio, please don't hesitate to share this video with them, and let's get talking in the comment section below.